This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken into three segments: Trade Spotlight futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that will spotlight two or three markets that may become trading opportunities for this week. This week begins with Monday, November 30th, 2020. We're coming off a shortened week last week with the Thanksgiving holiday in the U.S. We have a full week this week. Last week I looked at four charts that had potential to set up, but most likely wouldn't with the holiday week upon us. One did break out, and I will show you that chart, and then I'm carrying over two from last week so we can see if there's been any movement to set up trade opportunities. But before we get into those charts, please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Okay, moving along to our first chart. This is the December 2020 Australian dollar, and I have included an updated chart as of this morning's trading. Now, there was a potential resistance level that I drew off with this horizontal line last week, and you can see throughout that week it broke and continued higher, trading up near this 12-month contract high. That 12-month contract high is 74.16 from September 1st. Today's high, this is Monday when I'm recording this video, 74.08 half. So we haven't taken out the 12-month contract high. This is setting up potentially a double top formation, though you do like to see these points further spaced apart. But we have a short-term double bottom formation. I was already looking at this market to the downside, so this will add some potentially stronger resistance up at this level, and that's where a stop loss would be placed. Looked at last week, the moving averages were pointing up, and that's still the case. The 20-day moving average even stronger to the upside based on the last 5 days of trading activity here. My trend indicator, this is MACD, is relatively flat though, so it doesn't look like the trend is up in this market. And my MACD indicator, my stochastic indicator, this is my momentum indicator, is showing that the momentum is overbought and starting to wane a little bit. So again, this could be the end of its run. So I'm looking for a setup to the downside. I don't have a potential entry at this time. Let's see how today and the next couple of trading days go. Maybe it sets up a pivot point low that we can sell the contract on momentum using the momentum entry technique. Downside target still around this 200-day moving average at 68.57.6 and this potential support level near the 68 price level. So December 2020 Australian dollar still on our radar. Second chart that I had on the video last week and adding here as well is the January 2021 Soybean Meal. So very similar to the Australian dollar, was looking for an opportunity to the downside. I had a lower trend line drawn off that I adjusted to incorporate today's trading low. It's early on though, so that actually may break this trend line. But you can see last week we actually did break above what would have been a potential stop loss. I was looking at, let's see, this high is 399.80. That's this high right here. I was looking at that as a potential stop loss. So now we'll just adjust and we'll use this high, which is now the new contract high, 401.30. So on a downside move, our stop will be placed above that high. We are sideways, so didn't take a short entry yet because the formation wasn't strong enough for a close below that lower trend line. And you can see we would have been stopped out had we do it. So being patient, waiting for the proper time. We still have the moving averages pointed up. The trend does look like it is turning down though. This is again my MACD indicator, my stochastic indicator showing a build and downside momentum. So this can come sooner than later. Potential target would be a 50% Fibonacci retracement of this rally that we've seen since the middle of the summer, near the end of the summer. So looking at 342.80 as a potential target to the downside. Moving on to our third chart. First, want to point out I had the Chicago wheat chart on here last week, and that market's been sideways. There's no real strong formation, so I'm pulling that off my radar. And now I want to talk about the fourth chart that was there, March 2021 sugar, which actually broke out, and we sold the futures contract and set up a put option position in this market. Let's take a closer look at it. Was selling the contract on a break of this pivot point low, and you can see it did indeed do that on this trading session, which was the 25th of November. Market made a new low, opened higher the next session, and actually broke the previous session's high, but then closed lower. So that was a good sign to the downside, and now we're getting follow through, and we took out that previous low. So that previous low was 1466. Today's session low so far, 1456. So we are short from this breakout point here, and that was a sell at 1485. The stop loss is placed at 1570 above this 12-month contract high. That contract high is 1566 from November 17th. However, we can look to move that stop loss down, probably above this pivot point high here. That high is 1518, so we can potentially take off about 50 points of risk on this trade. The downside target is 1295. That's near the 200-day moving average. Potential reward of $2,464. Right now, we're initially risking $952 per contract. I still want to show you this chart because I still think there's an opportunity to get short. You know, if you can get a pullback to this pivot point low, there's an opportunity to get short. I think the March sugar has the potential. You can see the trend is down and strong. The momentum is actually creeping into the oversold level, so something to keep an eye on, though it can stay in that level for a period of time. That doesn't mean that it's not a strong market to the downside, but I'd like to see that momentum to continue to carry us through. We've got some support levels here that it will need momentum to break through. But this March 2021 sugar, we've got the futures contract set up. On the option side, we purchased the 1425 call from 44 points or $492.80. So that puts us at this first support level. And so that would be the first target on that option contract. Quick look at what the Trade Spotlight email service looks like. You'll get a write-up of the trade, the date so you know when it's sent out, pertinent information like entry orders, risk and reward parameters or stop losses and targets if it's a futures contract, information like margin requirements, option expiration dates, and a chart that you can click to enlarge. You can learn more about the Trade Spotlight Advisory by going to the Daniels Trading webpage, clicking on Advisories, then under Technical Analysis, you'll find the Trade Spotlight. You can learn more, see recent posts, subscribe. It's a free 90-day trial. And then after that, if you're a client of mine or the firm, it's a free resource. Otherwise, it's $99 quarterly to continue to receive the service. If you have any questions on any of the charts I discussed today or just the markets in general, you can reach me local, international, work cell, or toll free. Or of course, feel free to email tradespotlight@danielstrading.com. Thank you for taking the time to watch and listen to this video, and happy trading.